What's up, guys? I'm gonna film 3 more videos in a row to close out the year. We're gonna start with gold. So, as you guys know, gold, which is supposed to be the thing that backs our money, our currency in the United States, let's talk about it. So, when you're investing in gold, you're probably thinking, well, I've heard of buying gold, buying raw gold ingots. But the thing is, you can invest in gold in the stock market as well. You have ETFs, the exchange traded funds of gold mining companies, and you can also purchase or produce coin products such as a coin or a bullion. Now, there's many reasons to invest in gold. Some people say that, well, first, gold, it doesn't hold any monetary value as it used to. But however, everybody knows that we have the gold standard somewhere lying around, so let's get into it. So I have my notes here, and let's go ahead and begin. So, to understand what gold is, we gotta look back at the start of the gold market, and it's well before ancient Egypt. And gold around 560 BC wasn't really a currency until then, before then. So merchants wanted a transferable item that would simplify trade because you have various items out there. How are we going to make some form of money pop out? So a gold coin with the stamp seal could have been the answer. However, you also had jewelry. Whenever they melted items and melted gold, created items such as jewelry, such as chains, etc., that we know today. Or maybe they had necklaces or items they put for the ankle bracelets. All those items, gold. So when you follow gold, when it is in this process of being money, we understand that there's a standard that has to be lived up to. So the US bimetallic standard. That was in 1792, which stated simply that every monetary unit, which we know of today, and the US had to be backed by gold or silver, and that is what most of us take away from the gold standard or from the monetary item of gold. For example, $1 was equivalent to 24.75 grains of gold. Other words, the coins that were used as money simply represented the gold or silver standard that was deposited at the bank. However, it didn't last because in the 1900s, key events led to gold getting out of the monetary system. 1913, the Federal Reserve issued promissory notes, otherwise what we know as paper currency today, that could be redeemed in gold on demand. And then the Gold Reserve Act of 1934 allowed the US government to title all gold coins in circulation, putting an end to the minting of any new gold coins. So, therefore, gold was not really accepted as the gold standard anymore. But what I was saying earlier at the start of the video is that we still think of that happening, or we still think that is the case for the United States. So, in the modern economy, in the United States, we know that gold doesn't back the dollar anymore, or other worldwide currencies for that matter, but it still is important. There's the importance of it because it's critical to the global economy. You look at the balance sheets of central banks or the IMF, we understand that almost 1/5 of the world supply of above ground gold is present with central banks, and several central banks have added gold to their reserves because they don't have understanding of the long-term global economy or risk uncertainty with the long-term global economy. So they're thinking, okay, well, what if all the currencies fall and the values start fluctuating heavily? What if all the rates of everything just decides to spike high? Or what if all the currencies decide to decrease in value? What's going to happen? We need something to back up. We need something to keep value. If our currency is not worth anything, they go ahead and keep gold. So I guess the main thing for us as people that are investors that want to know more about gold, because this is just a background history about gold, or this is a outlook on gold. So getting into gold as an investment now is that gold is important because it's preserved wealth throughout generations. Early 1970s, 1 ounce was around $35. So let's say you wanted to hold a gold ounce or keep it $35. They could buy you the same things, but if you had an ounce of gold today and converted it for today's prices, you will have enough to buy something that's worth a lot more. Well, I don't say a lot more, but you have enough to buy something that is more in value. Because if you would have held that $35, then the money would have went down in terms of value, time value of money. So if you want to hold $35 to hold an ounce of gold, the value of gold increased. The dollar has been decreased in value because of inflation. So let's talk about hedging. Gold as a hedge against the dollar. So gold preserves wealth is even more important because when we have a declining US dollar, or when the market is so hyperinflated or overinflated that our money is just not good or strong, excuse me, as it used to be, gold historically has served as a hedge against both scenarios of inflation and declining US dollar. With rising inflation, everything goes up. Gold typically appreciates. When money is losing value, you have to position your investments in a hard asset that will maintain value. So, gold. So, two reasons why gold benefits from a declining dollar is because investors who are looking to buy gold, let's think about central banks. Let's not think about the average person. Let's think about central banks. Must sell their US dollars to make this transaction, ultimately drives the US dollar lower as global investors seek to diversify outside the dollar. So they're not putting their money or their bets in on the United States dollar anymore, but however, they are seeking to invest in something that will ultimately help them outside of declining currency. Therefore, they put it inside of a physical asset to give it monetary value, therefore, gold. And second thing, a weakening dollar makes gold cheaper for investors who hold other currencies because you have greater demand from those investors who hold those currencies that have appreciated relative to the US dollar. So whenever you have other currencies and you're thinking, if the US dollar is going down, what can I do to replace that? They go into gold. So gold is an investment that I would say is worth going into. I'm not saying go and get a whole bunch of gold and act like you run the place, or maybe you're King Solomon or something, or King Tut, but just saying that if you want to find a very good investment, something that can hold this value pretty well. And here's the thing when it comes to iced out jewelry, because I know first thing people are going to think, I can buy me a gold chain, a gold watch, etc. Yes, you can buy gold, but when you add diamonds, when you bedazzle it, it's just gonna drive the price downward when you try to sell it. Because think about gold being like a car, okay? Except that gold doesn't depreciate like a car does. But let's just say when it comes terms to modifying it, if you have a gold watch and then, as in today generation calls it bust down, if you want to add a whole bunch of jewelry, add a whole bunch of gold diamonds, etc. to that gold, and you're like, oh, I can sell it for a higher price, you can do it to somebody that probably doesn't know anything about the value of gold and diamonds and silver, etc., that doesn't know about precious metals. But whenever you sell it to actual people that buy watches, such as stores, etc., they're gonna say, "Hey, I'm paying less for it." Think about a modified car. You're not gonna go to a dealership and say, "Oh, give me more for my mods." They're gonna say, "No, take the base value of the car. You added this onto here. It's not a house. It's not that type of thing that appreciates. No, the car depreciates. Whatever you add into it goes along with the car. Whatever you add onto that gold, it goes down with the gold." So what we have to understand is that gold is a diversifying asset. You can add it to your portfolio. If you're worried about inflation, declining US dollar, protecting your wealth, invest in gold. It can help you. So therefore, we look at gold mining. There's different ways of owning gold. You can have futures, coins, ETFs, jewelry, etc. And I guess the main question is it a good or bad time to invest in gold? So according here, it's letting us know that when you check the merits of gold, let's check about from January 2022 to 23, and gold outperformed compared to the S&P 500. Gold was up around 3.5%, and therefore S&P fell more than 16% it fell. And gold is an inflation hedge and a safe haven during bear markets, which occurred during 2022. And gold isn't always the great investment or good investment, but the best time to invest is when there's negative sentiment and the asset's inexpensive. So we're not saying go ahead and snatch gold right now and be like, oh, I'm going to be good forever. No, but understand, do your research, and know that gold is a very good thing to invest in, but we're not saying it's incredible. It's not saying it's a perfect thing to invest in. So this is not financial advice. This is just me telling you guys how it is for gold. So what are the risks of gold? Price volatility. Gold can be volatile. It can fluctuate over short periods of time. So you may not know when to get into it. There's an inflation risk because some investors buy gold as a hedge against inflation, but there is no guarantee that the price of gold will increase along with the rate of inflation. And then gold can be gold price can be affected by political events, wars, etc., people digging, mining. And then if you physically own gold, you have to store it safely and insure it against loss or damage that can also add to the cost of your investment. So guys, you can invest many ways in gold, but just remember, be smart, do your research, and understand that gold is a good investment. It's not the world's perfect investment, but it can help you, but also understand that there are risks associated with investing in gold. So guys, thank you for watching. Tune in for the next video.